Well, hello everybody, welcome to the Strategy Lab video. My name is Alexander Nikitin. I am a professional trader and a developer of pattern search software. And if you guys are new, what I do in these videos, I show you how you can do the market research to get the information you need to get the answers to your questions, if you have any questions. And the market is the best teacher, so just go to the history of the chart, do the back test, and MPS Pro helps a lot. Okay, first of all, I want to say hello to MPS users, and you maybe already noticed this button here. This is the new feature, and this number here, this is also the new feature for MPS Pro. It is in beta testing, that's why you were not notified about the update, but you will get it for free as usual as soon as it properly tested and I find no bugs in these functions. Okay, but what this function is about, when it is on, you see, and I switch the time frame from 1 hour to 4 hours, for example, you see the patterns are recalculated automatically, yes, something like this. So this is the 30-minute, 1 hour, and so on. But if I switch that off, you see, and I go to 30-minute, it is not recalculated. Why do you need this feature to switch them off? Because you may find a pattern on 1 hour and you may say, okay, this is the pattern on 1 hour and I'm going to execute it based on the 15-minute time frame to see the reversal candles on the 15-minute time frame before I execute this trade, something like this. And this is very important to have that feature, and that's why I added that. And the numbers, what are the numbers? This is the conventional stop loss distance from the entry towards the stop loss that is drawn on the chart. I call it the valid zone. So within this, if price goes here, the pattern is still valid. We can execute sells within this rectangle, and if it exceeds that, then the pattern is invalidated. So this is the zone of validity, and it is 29.9 pips. And 26.1 is the initial take profit distance. It is also very important, and I will explain you in a second why. Also, what are some new features here? You have this number 646. What the heck is this number? And you have these arrows. What are these arrows? I will explain it to you in a second. Okay, now let's go back to my market research, and let me explain you and show you my thoughts, what I found, my discoveries that I found. Okay, here's the pattern. Yes, and because price may reverse here, or it may reverse here, or it may reverse here, or here and here, it is not very good to always enter at this. It is better to wait until we have some reversal and enter higher, or maybe even higher, maybe even higher, maybe even higher. The problem is how we exactly identify the reversal. What is the reversal? How exactly I know that it is a reversal? Maybe it is only that. Yes, maybe it is only this. So I will enter here, and I'm going to my stop loss, and here's my stop loss. Okay, how do you know that? You never know it. And after examining thousands of patterns, I came to conclusion that RSI helps a lot. If we draw an RSI like this, here's the RSI, and here's the point A like this, and if the RSI was oversold at A and then it goes overbought at your D point, yes, just imagine that. That I draw it perfect. So it went straight from oversold to overbought. This is those situations when the patterns work best. And to get the exact reversal, yes, to get the top of that reversal, simply wait for price to go out from the oversold. So the overbought is 70, oversold is 30, and the RSI period is 13 because I like 13. It is a Fibonacci number. It is as simple as that. Okay, as for the stop loss, where should you place your stop loss? Okay, the logic says this: we have a pattern, we have an RSI, and now it goes out from our bought condition, from way here. It goes from overbought condition, yes, and from here I understand that the reversal already happened, and if the reversal is valid, it goes deeper, yes. If it is not valid, it goes higher. So what I do in this case, I simply calculate my stop loss as 3 ATR, like this. Just imagine this one is a stop loss, and I sell it here, and my 3 ATR stop loss is here. Sometimes it is above X, yes, but sometimes it is not. Maybe it is very small, 3 ATR, it depends on the pattern size, yes, and it may be below that. And if the reversal is valid, it goes straight and hits my targets. If it is not valid, I'm not needed to risk more than 3 ATR. And now here's the answer to your question: what the heck is this number? It is exactly 3 ATR. It is not ATR period 7, ATR period 5, ATR period something. It is the ATR of all the bars available on this chart. Currently on this chart I have available 250,000 bars. So it is the average of this, average range, average candle range, average true range of this number of bars. You see, 250,000. Okay, hope you understood that. Next, what else should be explained? Well, I think that's it. That's it. Now, what about the rules? The new strategy that I have created, and I back tested, and I will show you the results of that back test as well. What are the rules? For example, we have a pattern, yes, and it goes here and here and here, and as it crosses the 786, it enters the reversal area, and the reversal area is valid all the way up to 113. You see, 786, 113. Okay, monster pattern search users should think about the bad patterns and godly patterns for this formation, and about cipher patterns for this formation. As for the bad pattern, the pattern becomes valid if it hits 786, not 886 but 786. So this way we have a kind of unified pattern: the 786 bad, 786 godly, and the 786 cipher pattern. So these patterns should be enabled and should be drawn by your monster pattern search. Okay, this is your valid area. So if reversal takes place within this area, then you enter. If it goes straight through, okay, no trade, no entry, no loss. Okay, what you need to do, you need to wait for price to get out from that RSI overbought, oversold. Just look at that. Once it get out, then you go stretch your fibs from here to the highest, yes, and you measure the distance of your take profit. It is 50. Okay, if it is 50 and it is less than your 3 ATR, then it is okay. If it is not less, for example, your 3 ATR is a bit higher than 50, then you stretch your fibs once again from your take profit to your stop loss, and you execute your trade at this level of half. You see that half, the level of half. Okay, now we don't need this, so you execute slightly higher. Well, and now the question arises: okay, on 1 hour the ATR is that large. On 30 minutes it is smaller, on 15 minutes it is even smaller, and on 5 minutes it is even smaller. The same with RSI. On 1 hour it is not very sensitive. On 30 minutes it is more sensitive. In 15 minutes it is even more sensitive to this. How do I know what time frame I need to use to execute patterns? Okay, this is very simple. What you need to do, you need to look at these numbers. So this number, the second number, shows the potential take profit. It is 26.1, yes, and your potential take profit should be more than your stop loss, and we agree that our stop loss is 3 ATR. So this take profit should be more than your 3 ATR. The 3 ATR is shown here, 64.6. This means that I am to switch to 30 minutes. Okay, need not to recalculate that. Now the 3 ATR is 45.8. It is still more. Then I switch to 15 minutes. Now the 3 ATR is 32.6. It is still more than take profit. Then I switch to 5 minutes. And now what we get? Now we get this pattern. Yes? So what happens here? First of all, the price should touch the 786. So let us assume it did touch 786. Or maybe you will create a rule that says, okay, if it is few pips away from 786, maybe it should be considered valid. It doesn't matter. For now, for the purpose of the demonstration, simply assume that it did touch. It didn't touch right now, but simply assume that it did touch. Okay, so what we have? We have the distance from here to here. It says 17.0. 17.0 is greater than 14.5. So if we risk our 14.5, let me draw that, 16, 15, 14.5, we add that to the entry, from entry higher, not from highest high, not from here, but from entry. So this way we always have that risk to reward being positive. The stop loss is that, take profit is that. Very simple. One entry, one in, one out. Okay. Entry, stop, take profit. After that, the Fibonacci is not recalculated. You should not restretch that if price goes higher. They should be placed on that initial level, the initial high that you predicted as a reversal. Okay, well, that's it. Now let's go to do some kind of backtesting maybe, and I will show you some examples. Let's go somewhere. Okay, what we need to do, we need to go to this, we need to go to this, and we need to type it minus. Let's calculate the last 2000 bars, analyze them, not to go very deep into history, and of course I am to restretch that, recalculate them. Okay, now I have a chart. It is yes, we have some patterns 2000 bars away. Okay, we have a pattern here, yes, like this. It is a Gottlieb pattern. I call it a Gottlieb, maybe a bad pattern, but it doesn't matter because the entry is the 786, and I pay attention to this number. It is 24.4. 24.4 is the potential take profit. I remind you that if you stretch the take profit from A to D, this will be exactly your 24.4, like this, 24.4. Simply for that purpose of saving my time, I coded that. Okay. Okay, now it is 24.4 is the take profit, and it should be greater than my 3 ATR. How do I know my 3 ATR? You can calculate it manually. It doesn't matter how you calculate your ATR. You can calculate it manually. But I coded that, and it is calculated automatically, and it is shown in the comments. Okay, so my 3 ATR shows that it is 64.6. This means that I am to drop into lower time frame. Okay, lower time frame says that the 3 ATR is 45.8. I have 24.4. This means I am to go even lower to 15-minute time frame. Okay, it says 32.6 is your stop loss. Take profit is 24.4, even lower to 5-minute chart. Okay, now I am at my trading place, my execution time frame. Okay, the first candle is this. This is the example of a losing trade, I suppose. The first candle is this. It triggers the entry, not the entry, but it completes the pattern. Then it goes lower, lower, and lower, and lower. Here it is. And look at these arrows. This is my another indicator that shows that price came back from the oversold condition and started to point to the upside on the RSI period 13. Okay, so you place your order here. You know that your stop loss is 14.5. 14.5. You place your stop loss here. You know that your take profit is this one. It is 23.2. 23.2 is greater than 14.5. That's why you don't need to adjust your entry, and that's okay. This is absolutely okay. This is your attempt number one. Attempt number one. Why I call it attempt number one? After you've been stop lossed, you see, pay attention to this 382 level. You still stay within the valid area. So you restretch your fibs here and you place your stop loss again here. You see, again you have that arrow, again you have the second attempt. Here's your stop loss, and then you have your second attempt and you have your winner. Understood? And this way your target is 26. It is greater than 14.5. So on your first trade you have lost 14.5. On your second trade you have won 26. This is the idea that I have, because you don't know if the reversal takes place here. We tried, but it didn't work. Then the next, after being stopped out, we tried here and it did work. You see? And this idea was proven to be amazing. Okay, here's the chart. Although if you trade it traditionally, yes, you simply place a limit order here, your stop loss here, you just stopped out, and that's it. But if you trade it the way I just explained to you, you are first stopped out and then you generated more than you have lost when you were stopped out. Okay, again, we have that cipher pattern. It didn't complete, price never came here, but we have that godly pattern. I will call it godly. It may be a but, it doesn't matter, because there's 786 for both, for that or that, for whatever pattern. Okay, 18.6. You see that? 18.6. Obviously, if we go to 15 minute, it is 32.6. 32.6. It is greater than we can afford ourselves. Yes, 18.6 is greater than 32.6. That's why we need to switch to 5-minute chart. Go in here. Let me adjust my fibs. Here are they. Let me adjust my entry right now. Okay, the pattern completed by this candle when it gapped through the entry. Yes, then price goes higher, higher, and higher, and higher, and higher. You see, no 113 was hit, so we stay within this valid area. And pay attention to this. This is when price goes out from oversold condition to this one. On your RSI it looks this way. This is 70. This coincides with that. I just coded that indicator in order not to have RSI, not to watch it constantly, but you can look at it absolutely old-fashioned way. Of course, I have a kind of advantage because I am a programmer, and well, if you don't have it, never mind, you can do it manually. What we are to do? Exactly the same. First of all, just measure that range of your stop loss, your risk. Measure your risk first. 14.4, sorry, 14.5. You see that 14.5, the number, and place it above your entry. Okay, what we have in this case? We have the take profit of 18.6. You see, and it was a winner. Perfect. What if you were looking at your RSI on 1 hour? You see no arrows here, no overbought, no oversold, nothing. You simply missed this pattern. Because it was small, you just missed that. You simply missed the pattern. Or while waiting for a confirmation, even if you look for a candlestick formation confirmation, then you will need to wait until the candlestick formation appears, until the candle closes, yes, and after the candle close you make your decision to enter. And because the pattern is small, each and every candle may be of great significance, and it may go very far away from your entry and thus making your reward less profitable. This is the dilemma. Okay, now I suggest you this. If the pattern is small, if your reward is less than your risk, and the risk is always 3 ADR, then simply switch to lower time frame. Okay, let's consider another example. Here it is, 26.3. It means what? It means that 1 hour is pretty large for that pattern. Very large, I must say. Here's the pattern, yes. Let's go to 30 minutes. 30 minutes is large as well. 45.8. 15 minutes. Even 50, sorry. Even 15 minutes is large. 32.6. Okay. Let's go to 5. Now the 5 minutes is okay because we have 14.5. Okay, let us examine the entry. Here it is. What we have? We have nothing. Price went to take profit. We didn't have our signal of RSI signal. Okay, it happens. Sometimes we miss the patterns because the price action didn't give us any signals, and RSI didn't confirm the reversal. Okay, what is next? This one didn't complete. Here we have this cipher pattern. Perfectly stretch the fibs. This is the first bar that triggers the entry. 56.5. It is less than 1 hour, but it may be okay for 30 minutes. Yes, it is okay for 30 minutes because 30 minutes is 45.8. You can calculate the ATRs for each and every pair, for each and every time frame, and compile that kind of a table, and simply know it, have it by your side. You already know that 1 hour on euro-dollar is 64.6, 30 minutes is 45.8, 15 minutes is 32.6, 5 minutes is 14.5. You already know it. Okay, as for 13 minutes here we have some tricky execution. This is what I mean. by tricky execution. First of all, let us draw that range for you to understand what I mean. Here's the range, and it should be 45, 46.5, 45.8, 45.5. Okay, I am to adjust that. It should be 66. Okay, now it is exactly 14.5. We can even measure that. Sorry, 45.8. Should be 45.8. Okay, let us do it this way. 1, 2, 3, 50. Yes, 50. So if we detract 45.8, it should be okay, 45, that is 0.5042. Now it is exactly 45. Okay, here's the entry byte here. Yes, the stop loss, sorry, the Fibonacci is placed here. Okay, so place it here. Here's the entry, and pay attention to your take profit. Your take profit says 44.6 and your risk says 45.8. So what you need to do, you need to stretch your fibs from your take profit to your stop loss. Yes, okay, and this way you will measure the half. Half is this. It almost coincides, but it doesn't matter. Half is this. Okay, and now you see that you are slightly few pips below in order to have one-to-one risk to reward. And after that candle completed, we had some candles going lower. You see that? And it definitely completed your few pips below that. It definitely completed. Even if it didn't complete here, it may be completed here, here, or even here. Your trade was definitely completed. And then we had that bounce to trade 2 level. Okay, what else? Let's go to the next trade. Next trade, we should trade 2. Okay, and now it is the one that I was explaining in the very beginning. Well, hope you understood the rules. I was trying to explain you the rules on that historical examples. Let's go to the backtesting results. Here's the charts. I will explain them a bit later. Here's the stop loss. Here's the chart take profit. And you see the chart take profit, the result is greater. If it is negative, it is -1. If it is positive, it is greater than 1 or equal to 1. Okay, this is the result, the chart take profit and stop loss. And here we have new stop loss, new take profit. I added these columns to calculate some offsets. For example, I am to set an offset of 2 pips for spread. So each and every stop loss will be added 2 pips, and each and every take profit will be detracted 2 pips. You see this? It is detracted 2 pips. So if you want to know how in real-time environment based on stop, you also can add some commissions here, some taxes here, or something else. And of course this will all influence your performance, and the results will be then recalculated based on this new data. Okay, right now we don't have 1, we have 0.8 risk to reward. Initially it was 1 ideally, but because of spread we have it slightly negative. Okay, let's assume we have that no spread at all situation. What are your results? Your equity curve. Here it is. It looks this way. Here's your equity curve. I assume that you start from 20K, and out of the course of 121 trades, you end up at 31. 31, roughly 31. This means that you have generated 11 thousands. Yes, and because you have started 20K, it equals 55%. Okay, also that is very important. Here is the formula for calculating the drawdown. You see this strange, ugly looking formula. This is very frightful, frightening formula. Okay, but it calculates the drawdown. Every time we have a drawdown, it starts increasing, -1, like this, minus, minus, minus. And every time we recover the drawdown, it types 0. Every time we start the drawdown, it types -1, -2. Okay, and every time we recover, it types 0, and so on and so forth. After that, I drew this histogram, and it is obviously seen that the largest drawdown is 3.9%. And now think it for a moment. You have generated 55%, and your largest drawdown was only 3.9. Well, let me put it this way. Professional traders on Wall Street say that if you are able to generate on average annual 25% and your drawdown stays within 10%, you are a trading star. You are a perfect trader. But look at what happens here. You generate 55 and your drawdown stays within 3.9%, within 4%. You can easily double this. I am okay to have 10% drawdown. I can double that. Instead of risking 1%, here we have 1%. Let me risk 2%. Okay. Okay. Of course, my drawdowns will increase. Now my largest drawdown is what? 7%. Yes, I just doubled that. And my my outcome will also increase. Now my outcome is 47. What is 47? 47K is minus 20K. It equals 27. If I divide that by my initial account, what is it? 135%. 135% generated is enormous. It is fantastic, outstanding. It's not 20 trades, not 50 trades. It is 121. Okay, guys, I should tell you something else. This is euro dollar, starting from the period of 2008 and ending the period today. The patterns were drawn by MPS Pro on 1 hour time frame, and then they were paper trading executed based on this formula. If it is lower than current stop loss, then go to lower time frame, and then look for RSI being oversold, overbought, and going out of that oversold, overbought conditions. 3ADI is your stop loss, and straight to AD is your take profit. Well, hope it makes sense for you, because if you're not familiar with this pattern trading, maybe it is a bit difficult for you. If you are new, go to my website www, like this, ps-software.net. Yes, and not only you will find the information about the MPS Pro, MPS Auto, and MPS Manual that will draw these patterns for you automatically. You don't need to learn them by heart, to learn the rules of the identification, execution, and management. Well, you will also have the absolute free information on how these patterns exactly identified, in case you want to identify them manually. Well, there are some problems with manual identification because it is subjective. You may identify them this way during your backtesting, but when you start real-time trading, in majority of cases, you will simply force the patterns. You will try to see the pattern because you want the money, you want to win, or something like that. The stupid machine does it absolutely the same way, exactly the same way it was showing the patterns on backtesting. They are exactly the same way shown on real time. You see, the pattern is not completed, but we already have a pattern. And I already know that this pattern should be executed on 15-minute or 5-minute time frame. You can see, because it is the number of 31.5. Or you can measure that. Simply measure this and this. Okay, measure it manually. 31.5, 31.7. Few fractions of pip doesn't actually matter, and you obviously know that your current time frame is very large for this pattern. If you want to execute the trade and you don't want to be late, and at the same time you don't want to be very much in a hurry, then you should have a proper execution, proper time frame. Okay, on my website www.ps-software.net, click that, learn the patterns tab, and you will get absolutely free detailed trading course on how to identify this pattern, how to trade them, and how to execute them. You will not be given this exactly method that I explained here. You will be given the conventional rules of trading them. For example, the advanced patterns are simply limit order patterns. You place a limit order, you stop loss at 113 or whatever above X, and then you just wait until this or that is hit. No RSI is used. But if you watch these videos, you can improve your trading. Okay, I hope that's it for now. If you are interested in some details, we are having the pound Aussie bearish Gartley almost completed at 78.23.5, and 59.6 says that it should be executed at the 15-minute time frame. At the 15-minute time frame, watch for the candle to go out from that oversold, overbought conditions. And almost completed the Aussie dollar Gartley pattern at 77.25.4, and the pattern says that it should be executed where? Let me switch this. It should be executed at 5-minute time frame. Okay, then let's go here at that 31.5 is the pound dollar. 79, it says that it should be executed 31.5, 38 on 5-minute time frame. This particular pattern should be executed on 5-minute time frame because of its take profit. And this one, New Zealand Canada, already executed on 1 hour, 44.8. Let me show it to you. 44.8. It was this way. Okay, first of all, you see that we triggered the pattern and we have shown the example. Yes, here was my initial entry. You see that? We stay on current time frame because it is 44.8 and this says that it is 45.2. We should stay on 30 minutes, sorry. It is 44.8. It is 32.6. Okay, New Zealand, Canada, yes. 32.6 for New Zealand, Canada. Here's the stop loss. Okay, executed here. Some pattern is completed. I have alert. We've been stopped out here. Second attempt, as we didn't touch 113. Another attempt to execute here. I did enter already on this trade, and 36.4, 32.6. 36.4 is greater than 32.6. Now it is moving towards the stop loss. Maybe it is a bit late for you to execute right now, because it already hit the almost hit the targets. Okay, we had pound Aussie completed. Pound Aussie completed 59.6, and the execution will go to 15 minute 59.6. Now I am to stretch my fibs from here to here. I can delete this pattern, it's not needed, it's been invalidated. Okay, so what I will be looking now, I will be looking for this arrow appear. This arrow, this will mean that we have the RSI going out from overbought or oversold condition. You can also apply the RSI. Oscillators, RSI. You see it? It should go overbought, and then it should go out of that overbought. So for now it is nothing, it moves in the middle, and maybe this pattern will never go overbought, and maybe we will never have it. Okay, I don't need this indicator because I have my arrows. Well, now that's it. If you like this video, give me your thumbs up, share this video on social media. Until then, good luck and good trading. Hope to see you soon.